What's up, guys? Welcome back to DCA. Today, what we're going to do is talk about Ethereum. Specifically, what we're going to be talking about is the realized price of Ethereum. So if you're unfamiliar with realized price, what this is an on-chain metric which demonstrates to us where the average individual is holding Ethereum. Overall, this gives us a very, in general, accurate idea of where the average holder has Ethereum, because many individuals take Ethereum that they purchase, or any asset for that matter, move it off of exchanges into their own personal wallets. That's what we're seeing here. When an asset, or in this case, Ethereum, moves on chain, we record it as a new price that that individual is holding that asset. So, as an example, if you took Ethereum and bought it at $100 and moved it from the exchange into your wallet, then you, let's say, went to go sell it at $4,000. So obviously you put it back into the exchange. Now that Ethereum, which you bought at $100, is recorded as being moved at $4,000. So that would be recorded into the average price that an individual holds Ethereum on chain. So what does that mean? Well, in a recent video, we talked about the realized price for Bitcoin. And what we said was that if you take a look at the realized price, we'll make this larger here. When you look at the realized price, which is in orange, and you have the price of Bitcoin in blue, what we've seen historically is that when the price drops below the realized price, so like we saw here in 2014, 2015, and here in late 2018 and early 2019, as well as at the COVID capitulation event, when the price drops below the realized price, that is typically the point at which it will be very difficult for the price to drop significantly lower. What is the reason for that? Well, if you think about it this way, long-term holders are individuals that have a high level of conviction in the asset. In other words, they are in it for the long haul, regardless of what happens to the price, because in their opinion, price fluctuations occur to the upside and to the downside. But they believe that in the long term, Bitcoin, for instance, in this example, is around to stay. So in their opinion, even if the price drops below where they are holding the asset on average, so in this case, we're showing, holders on average have the asset at around $290. Even if the price goes below that, they believe it will recover and continue higher. So when the price in blue drops below the realized price in orange, what we're saying is it becomes a supply and demand issue. Individuals who hold the asset here are no longer, remember, these are typically at these prices once you start to get into these long extended bear markets. These are typically long-term holders who now have the asset, and they are simply not willing to supply the asset. So like I said, a supply and demand disequilibrium. And what happens when demand is greater than supply? Price goes up. So that's what we see in these cases where the price is dropping below the realized price. Okay. And we've run into this situation multiple times now. And each time you've seen that while the price can go below, certainly it can, it doesn't typically go below for long, and it doesn't often go very far below. Okay. And the younger an asset is, the farther below it can go, because it's quite simply more difficult to have a large base of individuals with a high level of conviction in a given asset when it's a younger asset. Okay, so that's sort of what we see in the case of Ethereum. Each time that Ethereum comes below this realized price, it typically recovers from there. Now, back in 2018 and 2019, we saw something similar to what we saw with Bitcoin's first major drop below its realized price. Okay, so if we go back to Bitcoin and we go back to this after the 2013 market cycle peak. We came below and we went significantly below. And in fact, we're below for about, starting right here in December of 2014, all the way until October of 2015. So nearly 9 months. And what do we see with Ethereum? After its first true market cycle in 2017 and early 2018, we fell below, and we fell below in August. And we didn't really get back above until February. And then, unfortunately, because of COVID, because of the lockdowns, and because of the panic that occurred as a result of that, we saw it drop back below again. So, a very similar type thing. Just over a year, we saw Ethereum hanging just below its realized price. And that realized price at the time, we started at around $350, and then you had just slow general capitulation throughout the bear market. Now, remember, and if you weren't in the market back then, you may not recall, but there was a lot of belief in Ethereum, but Ethereum had just gone from, down here at around $2 all the way up to prices of approximately $1,400. So a lot of people were in a position where they were trying to take profits, and the market was just crashing at this time. You had many altcoins specifically down 90% or greater, and Ethereum was in that same camp. So while there was a lot of belief in Ethereum at the time, there was also this general sense of uncertainty. And many people, even long-term holders, those with conviction, many of them lost their nerve at the time. And that's why you saw the realized price go from around 360 at its peak all the way down to, after COVID, all the way down to around $200. So there was a drop in the realized price. In fact, a bigger drop than you've seen for the realized price of Bitcoin over the course of a market cycle. We have seen drops in the realized price, but usually, for Bitcoin, we've seen it in general hang around a little bit better. Although even Bitcoin dropped from around $360 after its 2013 market cycle all the way down to 277. So, typically there is a correction in terms of the realized price, but the correction for Ethereum, in that it was an altcoin and people were uncertain of what was happening with crypto, as we were seeing essentially the sky drop around everyone, where Bitcoin was down 80%, altcoins were down 95, 96, 97%. So that sort of explains why we see this, fairly large drop here with Ethereum. So now we went from a place where the realized price was here at a peak at around $340 up to where we're at now at around $1,900. Okay. So since hitting our peak at around 1950 or so, Ethereum has now dropped down to around 1850. And if the market continues in a downward trend, I think you can, in general, expect to see this come down some, but we'll likely see it sort of track right along this $1,800 range, because I think there's more conviction around Ethereum this time around, in addition to the fact that the market cap is larger. So you have many more long-term holders who are going to believe that Ethereum is going to bounce back in the next cycle, or if this cycle does eventually continue. And therefore, it's my opinion that will likely hang right around this $1,800 level, maybe going down to $1,700 or so. So what is the significance of this? And what's the point of what we're saying here? Well, as we've seen in the past for Ethereum and for Bitcoin. So in general, once an asset gets below this realized price, the long-term holders are very likely to step in and start buying the asset. Okay, so, this sort of matches with some of the other analysis that we've done over the last month or so. We've been suggesting that if things start to look ugly, Ethereum could very well go down to $1,800. And that was before we even looked at realized price. And so I think this just sort of lines up with that and tells us that, if you believe that if things continue on this course, things continue to look ugly, that Ethereum can't get down to this price of $1,800, I think you're fooling yourself. I think you're being a bit naive to the facts. When I was making these videos initially, we were still well above $3,000. We were, closer to the $4,000 side. And I was suggesting that if things start to get ugly, we could head down to 3,000 and then 2,000. And I think a month or two ago, I suggested $1,800 based on a look at the volume profile visible range, showing where a large number of holders will form a level of support. And I was getting comments saying that, no, there's no way Ethereum ever goes below $3,000. This is BS analysis, etc. So just because you have an echo chamber in the crypto market indicating to you that this can't happen, everything's fine, everything's going to the moon, don't worry about it. Guys, just trust me. I'm not a crypto bear, and when I say trust me, I don't mean that this has to happen. I mean trust me in that it can happen. If you think that people aren't going to drop this asset on you onto the retail market in order to take profits where they've been holding the asset from several $100s, and perhaps they didn't get all out of the market in the high 4,000s or even approaching $5,000, people will attempt to take profits. And if things start to get really ugly, short-term holders will simply capitulate. We see it in every single market. Okay, so that's sort of where we're at now. But let's take this a step further. So what I have done is I've taken this realized price. Okay, so this is our realized price curve. And I've done regression analysis on the realized price in order to give us a range of realized price peaks as well as the bottoms for realized price. And we're going to forecast this forward into the future in order to give us an idea of where the price may be at in the future based on the current trend that we're seeing over time. So that's what we have here. Now, unfortunately, Glassnode does not let us run custom scripts inside of the Glassnode TradingView software. So we have to run this simply in TradingView. So we're looking at the log regression curve for the realized price for Ethereum. All right. And on the lower end of the scale, we're looking at, if you took a regression curve for this lower portion of the curve, and then in red is the regression curve for the upper portion of the curve. And this just simply gives us a range of where we might expect the asset to be over time. Now, do recall that in general, the asset does trade above its, at least in the setting of the market cycle peaks, the asset trades above its realized price. So we were 300% above in the last cycle, and in this cycle at our, at the peak earlier in the year, we were approximately 250% above. And currently we are at this moment approximately 50% above it. Okay. So this is the regression curve. All right. And you can sort of see what we just said. So we were about 300% above this upper end of the regression band back in 2018. And here we were approximately 250% above. All right. So this just shows you that, here is the lower end of the band. Now, what we can do is project this forward. So we're going to use a forecast. All right. And we'll just say, approximately 1,400 days in the future. So that's going to give us about 4 years look into the future. And over time, it will just give us an idea of, where the upper end of the average price held on chain may be, as well as where the lower end may be. Because remember, the lower end, if you look here, historically acts as a level of last resort. So once you get down to this level, typically this is approximately where the price will recover at, okay? Based on everything we've seen in the past and what we know about the, the longer term history of Bitcoin. So right now, the upper end and the lower end. So the upper end is at around $1,800, which we just saw here, right? We're at 1853. The lower end of the regression curve is all the way down at $400. Now, we don't expect that to happen though, because remember, we're only predicting where these, these sort of troughs will occur. And these will typically, when we're at these troughs, these occur right before a parabolic run, as we've seen. So, we hit a trough and then we go on a parabolic run. Then we hit a trough, parabolic run, trough, parabolic run. So, just to illustrate what this may look like, it, could be something like this and then going up from there. Okay. So if we just come out here, in terms of the regression curve, we're looking at something like this, where, we're moving over time along this regression curve. So where the bottom is at the moment isn't so important, because we know that we're well above the bottom of the curve, and we will be moving up over time monotonically, and we will hit this lower end of the regression curve at some point in the future. Okay. So let's look at, points in the future then. So let's start by looking at 2023, 1 year from now. So February of 2023. And what we can see is in blue, the lower end of the curve is at around $500, whereas the upper end of the curve is in pink, is at around $2,400. So if we look, let's just assume, because we're just doing a projection here to see where the upper end of the curve and the lower end of the curve could be. What if we have another approximately 4-year cycle? Now, I'm not a big proponent of 4-year cycles. I sort of think the reasoning behind 4-year cycles is flawed in that, the 4-year cycle requires that the miners are the sort of the driving force behind the cycle. So I don't necessarily believe in 4-year cycles. Let me just put that out there to start with. But, we need to just, in order to perform the analysis, we need to pick some arbitrary amount of time. So let's just say 4 years. So, the next halving will occur sometime in 2024. So let's say that the next market cycle peak occurs at sometime in 2025. Well, out in 2025, so we're looking right around here. That's going to give us, if we just go to February, that would give us a peak at around $4,000. Now remember, when you hit a market cycle peak, you're typically trading above this upper band. In fact, we've been 300% here or more, and around 250% here. So let's just say, just for argument's sake, that we're around 200 to 215% above. Well, that's going to give you a price of around $8,400. Okay. So what this does is, if nothing more, it can't define for you exactly where these, where the price will be in 4 years, because anything can happen. For instance, this particular cycle could continue. We could be in a super cycle. We could be in a lengthening cycle. We simply don't know. So what this is doing is merely giving you a framework with which to judge, based on everything we currently know, what might we be able to say about the price in the future. So I do tend to think that this does give you a more solid form of analysis than just looking at the price regression bands, because we're looking at average prices held over long periods of time. These parabolic moves are very difficult to gauge how similar each one will be to the prior one, because they're completely fueled off of FOMO type events. Whereas average realized price, so the realized price, that's based off where long-term holders have the asset over time. Okay, not exclusively long-term holders, but a large component of the realized price is formed based off looking at long-term holders. Something like this, like I said, it gives us a framework. It's not going to be perfect, but it does give us an idea of, looking all the way out to 2025. We may expect something like a $8,000, $9,000 Ethereum at that time. Okay, so I'm gonna make this available. I'm actually going to do the log regression curves for Ethereum as well, and add these onto this indicator. And you can see, you can come in here and select how far out you would like to perform the forecast. So you could do it for, if you wanted, you could do it for just 100 days like this, and then your forecast bands will change, and then you'll have the price, and you can just toggle on and off whatever bands you want to look at. All right, you can change the colors, etc. So I'm going to be releasing this one onto my trading view. You can find the link to sign up for it on the Discord channel. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. And just one quick thing, it's not going to be on there tonight. It'll probably be on TradingView and available in a day or two. So yeah, that's it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.